All right, what about the net investment income tax? Who pays this additional tax on investment income? So while wages and self-employment income, they were always subject to both federal income tax and Medicare, investment income such as interest, dividends, capital gains, and rental income, they were only subject to federal income tax. They were never subject to Medicare or Social Security before. But all that changed when Obamacare became law in 2010. Now, to pay for Obamacare, certain individuals must pay Medicare tax on their investment income. And you can probably guess who those individuals are. A 3.8% tax on those whose modified AGI exceeds $250,000 married filing jointly or $200,000 head of householders single. So higher income taxpayers are now asked to contribute to Obamacare by paying Medicare tax on their investment income at 3.8%. And it applies to the lesser of the net investment income or the excess of their AGI over AGI thresholds. It's not just interest and dividends, it's also rental, real estate income, and capital gains. They're also included in net investment income. Therefore, those already paying 20% on capital gains will now pay 23.8%, with the extra 3.8% called the net investment income tax or the Obamacare tax. So this 3.8% tax on those whose modified AGI exceeds $250,000 for married joint, $200,000 for head of householder single. Let's look at Ted, single filer. He has W-2 income of $180,000. He has net investment income of $110,000 more. The 3.8% would be paid on how much income? And the answer is $90,000 because the excess of his AGI over the AGI threshold, since he's single, the threshold is $200,000. His total AGI is $290,000, and $90,000 would be the excess. And that's lower, $90,000 is less than the net investment income, which they told us is $110,000. So Ted's going to have to pay a 3.8% surtax, an extra tax, on the $90,000 to help pay for Obamacare. So let's try this. The Kellys, married filing jointly, have ordinary taxable income of $300,000 and investment income of $60,000. Okay, so that means their total would be $360,000. The 3.8% tax will be paid on what amount of income? And the answer will be $60,000 because the excess of AGI over the AGI threshold. $360,000 over $250,000 for married joint gives you $110,000 of excess AGI. Compare that to the investment income of $60,000, and the lesser amount, $60,000, will be taxed at 3.8%. The 3.8% tax applies to the lesser of the net investment income, in this case $60,000, or the excess of AGI over the threshold. So you'll have to know for the exam that the threshold for married filing jointly is $250,000. For single and head of household, that threshold is $200,000. So letter B is correct. All right, for purposes of the 3.8% tax on net investment income, which of the following is correct? 1. Applies to taxpayers whose modified AGI exceeds $250,000 if married filing jointly and $200,000 if single or head of household. Are those the thresholds? Yes. 2. Net investment income includes income from interest and dividends, but not capital gains? No. Capital gains are included also. So the answer is A. The 3.8% net investment income tax applies to taxpayers whose modified AGI exceeds $250,000 if married joint, $200,000 if single or head of household. But 2 is wrong because net investment income includes income from interest and dividends and capital gains, which actually makes the highest rate for capital gains 23.8% instead of 20%. Now, most people we know pay 15% for capital gains, but the higher income taxpayers will pay 20% unless they're subject to the net investment income tax. Then they're going to pay 23.8% on their capital gain. All right, the onlys, married filing jointly, have ordinary taxable income of $220,000 plus they have investment income of $32,000. The 3.8% tax will be paid on what amount of income? So they're married filing jointly, and it looks like they're over the threshold of $250,000 because they have $252,000. So that puts them $2,000 over the threshold, and the 3.8% is paid on the lesser of that $2,000 excess over the AGI threshold, or the amount of the investment income, $32,000. So the $2,000 is less than $32,000, so they'll pay 3.8% on $2,000. Choice B is correct. How about this? The Hopkins, married filing jointly, have ordinary taxable income of $180,000, plus they have investment income of $34,000. The 3.8% tax will be paid on what amount of income? And if you think you know, leave me the answer in the comments section. And if you need more help on the CPA exam, go to i75cpareview.com. Get yourself on the right road with me, Darius Clark, because the right teacher makes all the difference.